So, a lot's been said already today, Jim, about the curve, what it means for the timing of a recession. And we should point out, it doesn't necessarily mean stocks start going down.
Well, look, I have the list in my hand. It's kind of like Senator McCarthy. List in my hand of 54 known stocks in the S&P and how they would do in inverted. And out of, let's just say, the top 20 I've been working on, there's 3 that are hurt. There's 17 that win. Now, if everybody decides that they're going to pay less for every stock because of this, obviously all of them will lose, and the algorithms are set to make it so all these lose. But I would point out that our economy is uniquely not as sensitive because these are not exporters that need to have a dollar weaker. Remember, our dollar's just getting stronger as these guys. It's an extraordinary rally in dollar. I don't want to see it, but I struggle to reach a conclusion that this is all bad, given the fact that Germany has had these rates for some time, and their market's not doing that badly, even though they have an export economy. And their DAX in real terms is up, even though they're exporting the Mercedes-Benz, Volkswagen, and BMW right to China, and those sales are very weak as we see the numbers from China. So it's not the end of the world. Or the German market would be down big.
Well, no one's asking if it's the end of the world. They're asking if it's the end of the cycle, right?
I know. And I think that the end of the cycle it heavily relies on things like what Diana Olick talked about, which is this burst of mortgage refinance. The end of the cycle, look, if you want the end of the cycle, it's Boeing. We don't talk enough about it. Boeing is... Wilbur
Ross brought it up a few months ago.
Man, I'm concerned. I really am concerned. I just don't know how they get that thing. They got to fix that. And if they did, then we'd have a reacceleration of the economy. I mean, even GE, where there's more insider buying, 3 now insiders, that's been hurt by it. So I don't want to be too scattershot, but when you look at our S&P, you have to wonder, should we sell Merck? Should we sell Merck on this? Should we sell J&J on it? More than 3% yield, a AAA balance sheet. Is this the time to sell Google, Alphabet, $130 billion in cash? Now, number 6 is one that you might want to sell, but I would never do it. Berkshire Hathaway. Why? Because it's filled with the financials that should do badly in this environment. Number 9, J.P. Morgan, even though it yields more than 3%, maybe numbers have to come down. I do think that in the end, after you take everything down, you then have to look and see what was taken down correctly and not. If Macy's were in the top 10, the answer would be absolutely. But how much is that execution? That was bad execution.
Yeah, we're going to talk about Macy's earnings in a moment. But it sounds like you don't necessarily disagree with the notion that we get a seasonal low this fall. No, and that
I don't disagree.
The chance to buy might be coming later in the year.
I think that, yes, I think that's a good summary of things. I believe that the volatility is going to be here for a while. I don't like the whippy action because what it says is if you look, yesterday we went up, okay? But then we plateaued and we did nothing. We did nothing. And the VIX didn't go down enough to make me feel that things that were kind of out of the woods. We had a good presentation on that last night. But then I sit back and I say, okay, what reported last night? Well, Real. Wow, that was a good quarter. I know that Real is not Macy's. Tilray, not that good. Yep. But on a day-to-day basis, I still see reasons to like some things, but not as many.